And welcome to The Bottom Line, where we unpack some of the main business and economic stories of the day. The Warsaw Stock Exchange is the largest stock exchange in Central and Eastern Europe, and the daily activities of the markets can tell us a lot about the financial bearing of the economy. Today I'm joined by Jerzy Nikorowski, Chief Stock Analyst at BNP Paribas Brokerage House, to tell us about the Warsaw Stock Exchange in 2024 and what major developments we might expect in 2025. Hello, and thank you for joining us in the studio today.
Hello, thank you for the invitation. Glad to see you.
So, for those who are not in the know, has 2024 actually been a good year for the Warsaw Stock Exchange?
It was for several reasons. It was a Goldilocks time when we enjoyed the decrease in the interest rates, which is quite positive for all the investments that are linked to the fixed income securities like bonds. It was also positive with regards to the returns on the stock exchange itself, like equities listed on our capital market. So basically we had the beginning of the year, which was fantastic. Speaking also about the relative performance of our companies comparing to the peers in the region, our stock market performed really strongly. When the second half of the year was not so brilliant, but we can say it's also rather positive.
I'm going to stop you there. Can you just tell us a little bit about what a Goldilocks time is? Because for most people, I think they'll think of that story with the bears and the porridge, and they might not quite understand what that means with the stock exchange.
There is a link with the story, but basically it's about the perfect, the sweet spot situation where we have the economic conditions of the market plus the monetary condition meeting together to allow the companies to perform better in terms of the profit and loss, showing better results, better sales, and reporting better numbers. So in our case, when we speak about 2024, we had decreasing burden of the interest rates on the financial part of the companies, paying lower rates of the debt. Plus, we also witnessed the economic rebound, especially from the second quarter of this year. The economic cycle is supportive for the listed companies, which means that the companies basically generate better numbers from the operational activity like sales and so on. So this is the situation where we have external conditions plus downturn conditions from the consumer cycle meeting together, benefiting the companies.
Okay, and in terms of events or developments, you speak of the first half being so positive. Which one took you by surprise the most and why?
We have a number of the companies that really performed well. So most of them they were linked to the financial sector. There were strong expectations regarding the Polish banks listed on the stock exchange that they would face the relief of some regulatory burden that was built during the previous government cycle. It covers also the suspension of the expectation on the suspension of the mortgage vacations, so-called, which were a strong hit to the Polish banks in the previous years. The same also the burden regarding the Swiss francs mortgages, which are still a big burden and the reason of the write-offs on many balance sheets of the banks. So altogether, the expectations towards this type of the change in the mentality of the government were very strong. Also, keeping in mind that Polish financial institutions represent almost, not closely, but almost 50% of the capitalization of the blue chip indices of our market. It means that when we face the inflows of the capital from external investors, they landed also through the benchmark weights of the indices on the financial companies. I speak about the external investment because when we analyze the statistics about the inflows of the capital on the local markets through the investment funds in Poland, the numbers are still negative. So when we read the statistics from the Council of the Investment Fund Council, ISFA. So the statistics are extremely positive for all strategies of the investment fund that are concentrated on the local debt, money market funds and the bonds. and they're still negative for the equity funds, which means that all the inflows of the capital that we witnessed this year, they were either external or they were coming from the rotation of the portfolio inside the same money, so no new inflows, or just from the retail investors, like casual, everyday person who has the securities account in the banks or the brokerage houses.
Okay. And on the other end of the spectrum, what would you say was the most concerning development of this year that perhaps might impact next year as well?
Well, basically, we are still the country which is close to the war zone. Yeah, so we are still perceived by external investors as the region which is heavily impacted by the war. It means also the suspension of certain investments in our region. Also, Poland is quite vocal in this conflict, so which means that negative information about the de-escalation of the situation in Ukraine impact Poland strongly. So this is one part of the situation. The second part is still we have quite unclear and unpredictable behavior of the central bank, which is not always followed by the needs of the economy, but there is some elements of the policy place inside, political standoff between the previous government and the current government, and the central bank governor representing the previous team. So this is the impacting the position of the Polish capital market in a negative way. Yeah.
And obviously, Żabka was entering the stock exchange market was a big event, something that a lot of people could identify with,
Yes.
even if they're not so into following the Warsaw Stock Exchange. Can you tell us why there aren't more Żabkas, shall we say, on the Warsaw Stock Exchange, and what can be done to increase a greater presence of more Żabkas, shall we say?
That's a very good question, actually. We speak about the demand also from the retail investors as well as from the financial institutions on the IPOs. And it's true that we didn't see good IPO after InPost or Allegro several years ago of the big company on the Polish Stock Exchange. And the reasons, there are many reasons for that. Basically, the IPO itself of Żabka wasn't a huge success, as you probably know, because when we look at the numbers of the listed level of the quotations on the first days, till now, the company didn't show the positive performance of the price. And which means that probably the investment story was not persuasive enough for the investors to follow and buy the company on the next weeks. But basically, the weakness of the Polish capital market has different layers. There are no strong incentive for the individuals to go on the capital market as the retirement way to save for the retirement. There are no tax preferences for the investment on the capital market. We still, speaking about the Polish market, we are still, as the society, more used to invest through the real estate than going on the stock market. Even when we look after analysis of the possibilities on the stock market or the capital market, the yields, the income that you can receive this way is more attractive for the investors than going on the property, real estate investment and receiving the passive rents from this form of the investment. But if we can get back also to the notion of the events through the 2024, probably one of the major events that also impacted Polish Stock Exchange was the election of the American president by the end of the year. It impacted strongly also the risk tolerance of the investors, and rebalancing of the portfolios was really heavy after the elections in the United States, and so-called pro-Trump trades, selling some securities exposed on the geopolitical risks and exiting the regions that are also quite sensitive to the geopolitics, which is also Poland. It was the part of the Trump trade. So elections in the United States did have the negative impact on the capital outflows from our region as well.
And just very, very quickly, what are the biggest obstacles to the stock exchange's development and expansion? Just very quickly as we wrap up.
I just can say a few keywords. Education of the society, which means that to show the capabilities of the stock exchange to give passive income, low risk income in the same way that can be gained through the real estate, for example. And the second part is probably long-term strategy from the government to promote this type of the investment, both on the institutional side, on the investment funds, and the individuals.
Okay, Jerzy Nikorowski, thank you so much for joining
us
today. Thank you very much. And we were joined by Jerzy Nikorowski, Chief Stock Analyst at BNP Paribas Brokerage House. Thank you so much for joining us today. I was your host, Marie Cato. You join us every weekday for Business Arena at 5 p.m. CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and features, stay with us on TVP World. Goodbye.